So hello everyone. So this is CS Anidya Saraf, your friend, mentor and coach for audit. So for all the students from South India, I have decided that for the CA Inter audit, I'll be providing the audio notes of all the different chapters in English language. Now this particular audio notes are very effective. This is something that brought a revolution in audit in the CA finals, right? And now I have decided to brought it at the CA Inter level for the South India students. Now if for every chapter I'll be providing you the gist of the chapter in just a few minutes in the English language. What you have to do is you have to just hear these voice clips on your idle time, and you will see that the confidence in the audit subject has increased, right? So in this particular audio, I'll be focusing on the chapter ethics and terms of audit engagement. Do remember one thing, I'll be just discussing the non-standards part here. For the standards part, I'll be coming with separate audio notes, right? So first of all, talking about this particular chapter, that is the ethics and terms of audit engagement. It is chapter number 11 of the ICS study material. So first of all, what is ethics? What do you mean by ethics? So see, ethics means moral principles that is guiding a person what is right and what is wrong. So ethics means set of moral principles which govern a person's behavior, that what is right and what is wrong. It is the ethics is the science of morals in human conduct. You must have studied moral science from your childhood days, right? Now when we talk about ethics, so basically the person should be good enough, the person should be ethical in his life, he should follow the principle of morals in his life. Similarly, there is a need for professional ethics. Now every profession has its own ethics, like law, medicine, every profession has its own ethics. Similarly, audit profession also has its own ethics, and the requirement of ethics in auditing is manifold. Means, you know, the need for the ethics is quite more in auditing, because a number of stakeholders like the governments, taxation authorities, employees, investors, the creditors, the suppliers, they actually repose tremendous trust in services rendered by the chartered accountants. And audit is the assurance engagement, and the objective is to enhance confidence of the intended users. So that is why there is a need of professional ethics, and the ICI has actually brought out code of ethics that the chartered accountant is expected to follow. Then they need to follow the fundamental principles of professional ethics, and if there is any deviation from the ethical responsibilities, if the CA is not following the ethical principles, then the ICI can take disciplinary action against the chartered accountants. So basically, ICI may fine the chartered accountant, suspend the membership, or even remove the membership in certain cases. Now there are two approaches of ethics. One is a ethical based approach, another is a legal based approach. There are two approaches. First is the, one is the ethical based approach, and second is the legal or the rule based approach. So ethical based approach is basically the principle based approach. What it says is that you need to just comply with the spirit of ethics. So simply be ethical in every situation. Simply be ethical in every situation. Right. So a professional accountant should exercise professional judgment and try to be ethical in each and every situation, applying his professional knowledge, skill, and expertise. But rule-based approach is a basically narrow outlook. What it says is that just focus on the rules, strictly adhere to the rules. Right, even if the spirit of ethics is overlooked, just focus on the rules, just comply by the rules. Now rules cannot be made for each and every practical scenario, so that is why the principle based ethics is a better approach. Now there are 5 fundamental principles of professional ethics. How you remember it as OIPCC? How you remember it? OIPCC. So O stands for objectivity, I stands for integrity, P stands for professional behavior, C stands for competence and due care, and C stands for confidentiality. So O stands for objectivity. So basically, objectivity by objectivity means that the professional accountant should not be biased, first of all. Secondly, there should be no conflict of interest, he should be independent, and third, he should not work under undue influence of any person. Now if we talk about professional integrity, so being integrity means that the professional accountant should be straightforward, the professional accountant should be honest, he should not be associated with any kind of false report, he should not be associated with any kind of false report, any kind of misleading report. Then we have professional behavior. By professional behavior, we means that the professional accountants are expected to comply with laws and regulations first of all, and they should avoid doing anything which would actually damage the reputation of ICI or bring disrepute to the ICAI. That is what we call as professional behavior. For example, ICI has written certain letters and asked the CA to reply, and the CA is simply ignoring those letters. So basically what he is doing is that he is not showing that professional courtesy and bringing a disrepute to the ICI. So professional behavior. Then we have confidentiality. So basically confidentiality is that during the course of audit, the professional accountant will get to know about certain information of the client. So he should not disclose the information of the client to any third party. There are only two exceptions. First is if the client gives the consent, then you can disclose. And secondly, if there is a requirement of law, then you can disclose. For example, in section 143 subsection 12, the auditor is required to report about any fraud, that is greater than or equal to 1 crore to the central government. So now that is the requirement of law. So there you can report, because the requirement of law will override the requirement of, given the ICI. And last we have is professional competence and due care. That is, the professional accountant should be competent enough. He should have the knowledge of all the different fields, of all the different standards, and he should exercise due care. Then the next topic we have is independence of audit. So when we talk about independence of audit, independence is a broad term. And independence basically means, as suggested in the guidance note, that judgment of a person is not subordinate to the wishes or directions of another person who have appointed him. Now, you see, when we talk about independence, there are three basic qualities that is associated with independence. That is, one is integrity, second is professional skepticism, and third is objectivity. You can remember as IPO. So three qualities associated with independence is IPO: integrity, integrity, then professional skepticism, that means being alert, always exercising a questioning mind, and then we have objectivity. Now there are two perspectives of independence. One we have is independence in appearance, another we have is independence in mind. So what is independence in appearance? So basically, avoid any kind of such facts and circumstances, that any third party who is knowledgeable, who is informed, who has knowledge of all the information, can easily conclude that, oh, you see, this CA is not independent, this CA is not following the principles of integrity, objectivity, and skepticism. His integrity has been compromised, his objectivity has been compromised, he will not be able to exercise professional skepticism. So avoid such kind of facts and circumstances. For example, the CA is holding some shares in the company. So any third party who will have the knowledge of those facts and circumstances, that is holding the share, he can easily conclude that, his integrity will be compromised, his objectivity will be compromised, and he will not be able to exercise skepticism if he accepts the audit. That is what we call as independence in appearance. Then there is independence of mind. So, but basically, what is independence of mind? That your state of mind should permit. So basically, you should know, you should be clear cut in your mind. Your state of mind would permit that, yes, I can give the opinion without being influenced. I can give the opinion without being influenced, and my judgment will not be compromised. I will be able to work with integrity, I will be able to exercise objectivity, and I will be able to apply my skepticism. That is what we call as independence of mind. That is, your state of mind should allow you to express an opinion without the integrity, skepticism, and objectivity being compromised. That is what we call as independence of mind. So both of the things must be considered. So basically, it is the duty of every chartered accountant that first of all he should determine that yes, he will be able to work independently or no. Then it is not so easy to be independent, my friends. There are 5 threats to independence. How will you remember the 5 threats? Saif Ali Khan, chef. So basically, this, every married man, he has a threat with his wife. The independence, basically. Now, chef also, he has a threat from Kareena, right? So now, threats to independence, you just remember chef. What you will remember is chef. So S stands for self-interest threat. S also stands for self-review threats. A stands for advocacy threats. I stands for intimidation threats. And F stands for familiarity threats. So there are 5 types of threats. So first we have self-interest threats. So basically, what is the self-interest threat? That the firm has an interest in the company, or its partner has an interest in the company, or maybe the associate firm has an interest in the company, direct financial interest. That is what we call as self-interest threat. Now, there are 6 examples given in the module, 6 circumstances that can create a self-interest threat. 4 examples they have given related to present, and 2 examples they have given related to future. So first I am telling you 4 examples that is related to the present. First is either the firm or the partner or the associate firm is having some direct financial interest in the client, maybe holding the shares. Secondly, maybe some loan or guarantee the firm or the partner or the associate firm they have taken from the company or given to the company. So that will create a self-interest threat. Third is they are undue dependent on total fees from the client. So basically, the major share of fees comes from one particular client. Then the self-interest threat will be created. Fourthly, they are having some close business relationship with the client, right? So that will create a self-interest threat. And then the 2 examples related to future. Maybe you are having some potential employment with the client. Maybe the partner of the firm, he is having that belief or understanding that in future he might get to work as the CEO of the company. And the fifth is contingent fees related to an assurance engagement. So basically, maybe the client is going to procure loans and all, and the loan work he is going to give to us, the firm, and they will get a contingent fees for that, nice fees for that. So these are the circumstances that can create a self-interest threat. Then you have self-review threat. Now, what is self-review threat? Self-review threat is basically that particularly that very person only, that very partner only, that very firm only, they only in a previous audit or non-assurance engagement led to the formation of a judgment or conclusion, and in the capacity of auditor they are only going to review the same. So see, it is going to be very funny now that let us say you were only the accountants of the company, and you only did the accounting for the company, and you are going to be the auditor. You are going to review your own work. So that is like reviewing your own work. So that will create a self-review threat. So there are three circumstances that will create self-review threat. Firstly, the auditor of the company is providing accounting services, management services, internal audit services, investment advisory services, actuarial services, right, all these services. Secondly, member of the assurance team was previously a director or officer of that client. Member of the assurance team was previously the director or officer of that client. So basically, when he was previously the director or officer, he must have been involved in the things. Again, as an auditor, he will review his own work. And thirdly, the auditor will perform some services that are themselves a subject matter of audit. So there are three circumstances that may create self-review threats. Then we have the third threat, that is the advocacy threat. So what is advocacy threat? Advocacy threat is basically when the auditor promotes. Auditor is promoting something. The auditor is himself promoting his client, and he is promoting his client to such an extent that his objectivity might get compromised. Now there are two examples given. First example is you are promoting shares in listed client of the entity's behalf. So you are only promoting the IPO of the client. So you will be, talking about the good things of the client. And then again, as an auditor, it will be difficult for you to find out the loopholes. Second is you are acting as an advocate on client's behalf in case of litigations and third party disputes. So you are only acting as a lawyer of the client. You are only advocating the client. So on one place you are advocating the client, and in another place as an auditor, you will be finding out the loopholes, the misstatements. Advocacy threat. Then we have familiarity threat. So basically, what are familiarity threats? So that is something you will get a realization from your within. These are self-evident. And a relationship with the client is developed, and you are going to get sympathetic feelings for the client. That is called as familiarity threat. To remove the familiarity threat, only that concept of rotation of companies, the rotation of auditors in companies that came, right? But that I will also say you it's a scam only. Practically, rotation of auditors is not so effective as we expected. Now there are some examples of familiarity threat. First is you see the close relative of the audit team is working in the company. So if the close relative is working, so that's a familiarity threat. You will be familiar towards your relative. You will be having that sympathy feeling towards your relative. Secondly, you are accepting some significant gifts from the client. So again, a relation will be developed. Thirdly, a long assurance is there. You have been working with the client for long. So again, a familiarity threat will be developed. And fourth situation they have given is maybe your former partner of the firm. The former partner of the firm is currently a director or senior employee of the client. So your former partner, the former partner of a firm, you will be having good relation with that person, and he is currently the director or a senior employee. Familiarity threat. And finally, we have intimidation threat. So intimidation threat means basically the client is stopping the auditor. The auditors are deterred from acting objectively to exercise skepticism. Client is creating some kind of force. He is threatening the auditor. Look, I will remove you. I will dismiss you. I will lower your fees. I will file litigations against you. So client is giving all kind of threatenings to the auditor. That is what is called as intimidation threat. Now, whenever there are threat to independence, the last topic is that we have to take certain safeguards. Right, we know that there are three fundamental principles for independence: integrity, professional skepticism, objectivity. Before taking any work, first of all, auditor must consider whether it involves a threat to his independence. If the threat exists, the auditor should either desist from the task, not accept the task, or at least apply safeguards to eliminate the threats. And if auditor is unable to apply safeguards, then it's better you don't accept the work only. So this is what you have to remember in this chapter, that is ethics in terms of audit engagement. As I told you, the standards part I will be covering separately. The standards part I'll be covering separately. So hopefully you enjoyed out there. And one more thing, if you want complete inter-audit exam oriented lectures, that is available at apnamental.com at very reasonable prices. You can just visit apnamental.com or contact office at 69019550555. And if you need my personal assistance, you may just WhatsApp me at 863-858-5920. All the very best.